Morning, everybody. Mike Anderson here with American Independent Marketing. We appreciate you making your time available today to join us on this benefits of bundling ancillary coverage webinar. Really pleased and excited to have with us Chris Allen and Carol Solik from LifeSecure. The two of them have done this webinar a number of different times. Chris assures me that he can turn his monitor around and still be able to do everything without looking at it. But the beauty of it is you got people that really know their way through and around this. And as we noted on the invitation, we're going to have some special emphasis for the state of Washington. And we're doing that because Washington has so much regulatory difficulty getting stuff approved that we want to emphasize opportunities that we've got available for agents that are trying to work with their clients to maximize opportunity, maximize protection. So some kind of standard stuff. We are recording this call like we always do. That means that everybody is on lecture mode. You can type questions in on the chat box, and along the way, we'll stop a couple, 3 times. Carol will answer the questions that come through. That way, we will also open up the microphones and such for questions when we get to the end. We do this so that we get a good quality recording. We'll process that recording. We will upload it onto our website so that you can circle back and listen at something if there was a particular part that you wanted to get back to. The marketing team here will be following up with everybody after the call with questions, all inquiries with regard to products, all inquiries with regard to licensing, contracting, appointments. You'll want to run those through our folks. If you reach into the LifeSecure folks, they're just going to direct you back here. And that enables us to make sure that the agency relationships and the hierarchy relationships are properly respected. So one last piece, next week's webinar will be on the Gillico annuity lineup that we've got. That'll be Derek Lape will be running that one for us. So anyway, I'm going to go ahead and get out of the way here. I'm going to turn this over to Chris. He's going to run things here on this. So Chris, I'm going to give it to you, to turn it over to you, and you take it away. Thanks.
Thank you, Mike. I appreciate that. And good morning, everybody. Today, as Mike mentioned, we're covering the benefits of bundling ancillary coverage with LifeSecure. And here's my face and my contact information. But as Mike mentioned, please direct all the calls and inquiries back to Mike and his team. I cover the West Coast, and here's my colleague, Carol Solik. She covers the southeastern part of the country for LifeSecure. So let's jump right in. Today, on our agenda, we're going to cover the history of LifeSecure. We're going to talk about what is bundling in 3 easy steps. We're going to do a product overview of Washington-specific products with LifeSecure. And then we're going to talk about ease of doing business, and we're going to look at some demographic slides on who is buying our product. So a little bit about LifeSecure. LifeSecure is a majority owned by the largest health plan in the state of Michigan, and we were founded in 2006. We did start as a long-term care carrier, and we certainly offer that product in the worksite space. Then we branched out into the ancillary marketplace. And basically in recent conferences, we've gotten a lot of inquiries on both the ancillary programs that we offer, as well as our long-term care programs. We're financially strong, we're fast growing, a stable company, and we really want our agents and our policyholders to have a good experience with us. So we focus a lot on our technology capabilities. We do offer national coverage, so we have products in 48 states and the District of Columbia. We do pay commissions weekly, and LifeSecure ranks among the top 3 carriers for individual accident sales, according to LIMRA. Here is our product portfolio. Today, we're going to cover the accident, critical illness, and the hospital indemnity program. And as I touched on, we do have long-term care available in the worksite space. The other 3 programs can be written in the worksite as well as the individual space. So we're going to focus on bundling. So what is bundling? Bundling is offering several products for sale as one combined product or service package. And we'll look at some examples. We know airlines, they bundle products. expedited boarding, free bag check, extra legroom, all are available as a bundling package with an airline. Movie theaters sell popcorn and other concessions, and U-Haul sells cardboard boxes and other packing supplies, as well as all their moving vehicles. So does providing ancillary products to overcome high deductible and copays help clients? And so we're going to dive deep into that today and take a look at how we can do that. So our first step is we want to understand your clients and uncover their needs. So it's really a needs analysis. So reaching out to your clients to reestablish contact with them, talk about what they might be needing, look at their medical plans, look where they may have some exposure, out-of-pocket risks. They may have a high deductible plan, coinsurance. So we want to do a needs analysis on what they currently have in place. And there may be potential gaps where these programs could fit in nicely. So we want to use questions that may uncover some of those needs. And they may uncover some medical and non-medical concerns that the client may have. So we have 4 questions that we use to discover the need. How many times, for example, have you or your family or friends had an accidental injury or a sudden serious health event? And many times people will open up and begin to discuss some of those things. I'll give you an example. Recently, my brother-in-law had a seizure in a grocery store in Seattle, and he fell and hit his head and had a traumatic brain injury and spent 11 days in the ICU. Previously never had any type of health issues. So things can come out of nowhere, and they certainly did for him and his family. So it did create an unexpected emotional and financial strain on their household. And then, great question to ask, how would you cover that out-of-pocket medical expense and other costs of $5,000 or more? And I actually talked to my sister recently about some of the capabilities and some of the things that she would need to know regarding her medical insurance in regards to this accident. So we look at which LifeSecure solutions would be a good fit to you and your family with financial support to help with bills and other expenses if there's an unexpected medical event. So as we do that needs analysis, we talk about what they currently have. You have the ability to find some gaps in coverages. And then offer some cost-effective solutions that you could review with them based on what they have told you about their concerns. So our goal at LifeSecure is to sell a solution to the problem and not just the product itself. By doing those steps and asking questions and developing that relationship, you may be able to uncover a need that the client may not have known existed. So we're going to jump right into our accident insurance with the accidental death benefit. It is guaranteed issue, guaranteed renewable to the age of 85, so it's guaranteed issue off the face of the application. And generally, turnarounds with this particular plan are within a day. So if you submit that program or that application into LifeSecure, you should be able to have a plan issued the following day or into the next. It does have an accidental death benefit attached to the plan, so it's going to be $10,000 for the primary and spouse, and $5,000 for each dependent child. And each dependent child can stay on the plan up to the age of 26. We have increased from 72 hours to 1 week the need to receive initial care for a covered accident. And we do have 2 deductible options, either $0 or $500, depending upon what the client sees as their need. We do cover up to 2 surgeries within 6 months of a covered accident, and that's per person per covered accident. And then this bullet point really is a differentiator in the marketplace. Reimbursement of actual expenses, less provider adjustments and discounts. So the way LifeSecure works is we pay off an EOB. And so upon submission, we pay that actual amount of the accident claim. And this is different than a number of other carriers in the marketplace, which pays off a schedule of benefits. So for example, on a scheduled benefit plan, they may be getting $1,000 for a surgery, $50 for crutches, things of that nature. We pay off the actual expense and less the provider adjustments and discounts. It is 24/7 coverage, both on the job and off the job, and we do not coordinate our payments of benefit to the client. Benefits are paid in addition to any other insurance that they currently have placed, and that does include workers' comp. So this is a great example of how a benefit payment would be made. So this family, they decided on a zero deductible plan with a $10,000 benefit bank. And so you see the list of injuries that Dave and his family had in that year. So Dave lacerated his finger, Kim had a torn ligament, Michael broke his nose, and Mandy had a broken leg. And you can see the reimbursable expenses there in the column. They did not have a deductible on this plan, so the total benefit payout was $10,000. Now, something important to remember is if a client exhausts their benefit bank in a year, within the year, it will renew itself on the 1st of the following year, January 1st of the following year. So that's an important part of our program and a need to know at time of enrollment. Here is a demographic chart, and I like these slides because it lets you have a really good idea of who's buying LifeSecure's accident program and where this program may fit in your book of business. So the average age here, we're looking at a person 46 years old. We have a pretty good split on male to female, and we're looking at a benefit bank of about $12,300. So that's on average, and there are different numbers there based on the percentages chosen. But the number that's interesting is the average annual premium is $469. We can use that number, and as we prospect our book of business, not only are you doing the right thing for your client by adding programs that cover those gaps that you exposed, but you're also putting additional revenue into your agency, and we can see those premium amounts right there. So at this point, we are on to the hospital recovery insurance, but I would like to ask Carol if we do have any questions in the chat box. We would love to answer those right now.
Hi, Chris. Thank you. Great job on the accident plan. No, at this time, I don't see any questions in the chat box. Thank you.
Okay. Thanks, Carol. Okay, so we're going to jump into the hospital recovery insurance with observation coverage. The issue ages are 18 to 85, and there are some state differences. For example, there is North Carolina at 18 to 64, but that information would be available on an agent portal. This product is available in the state of Washington, so this is what would be available for your clients. We do cover treatment in an observation unit, and an observation unit is defined as a part of the hospital outside of the emergency room, where a patient is diagnosed by medical professionals to determine what the issues are medically. This program is guaranteed renewable for life, and we do not reduce commissions at higher ages. So there will be, as your clients age, or if you're writing a different demographic, an older demographic, a Medicare person, for example, we don't reduce those commissions. It is age banded. You see the rating structure right there, unisex rates. Now, median price of spouses are in different age bands. So if your spouse happens to be 55 and you're 60, they'll take a median price if spouses are in that different age band. This is, as well as all of our products, our application signed state products. These products are individual programs. And if you are going to sell in my home state of Arizona, but you live in Texas, you need to be licensed and appointed with LifeSecure for both of those states you're going to solicit business. And then with this program, we do offer some guaranteed issue opportunities in the individual space, guaranteed issue for applicants in 64.5 to 65. And this is where it's a good opportunity for the people going into the Medicare space to offer additional coverages to help supplement their Med Advantage plan or their Medicare program that they're currently on. So you do have an opportunity to write a guaranteed issue program in that window. So how does hospital recovery insurance work? I like our plans because they're very simple, they're easy to explain, and much like the accident plan, there's not a lot of touch points in decision making. So your customer, he or she will choose a daily benefit amount of up to $900, and that can range in $10 increments. The annual benefit bank equals the daily benefit amount, which is what you choose, multiplied by 35. So this is the total amount available in a calendar year for each covered family member. Now, here is something different than the accident plan. In the accident plan, everybody that is, if you have family coverage, is using the plan or is covered by the plan, would be using that benefit bank. And so when it is done, as we mentioned, for the year, it would renew on January 1st. In this program, the hospital recovery program, there is a different way to pay out the benefit, and each person has their own benefit bank within that program. So for example, at time of enrollment, somebody took a $500 benefit. There are 35 days available on this plan, so they would have a $17,500 annual benefit bank on the HR3 plan. We do have some riders available. ER visit, 1 per calendar year, and that's a $300 benefit payout. Ambulance services, 1 per calendar year. That's ground transportation of $150 or air transportation of $500 benefit payout. Major diagnostic exams are covered at $500, and that's a CT, MRI, EEG, and that's going to be 1 per calendar year. And then there is a rehab facility benefit, and that's a $100 benefit payout for each year in a rehab facility immediately following a qualified hospital stay. And you get up to 15 days per calendar year on this. All of this information will be available in the agent portal as you quote these plans. So you can build a plan based on the needs uncovered at the time of sale. So here is our who's buying hospital recovery demographic slide. And you're going to see the demographic is just a little bit older here, but the split is 50-50. People aren't including their spouse as often as on the accident, and the average daily benefit is $435. So people are picking that benefit program as something that works well for themselves or their family. And then we jump down and we can see that the average annual premium is $605. So as we talked about, we have this opportunity to add additional programs that cover needs that you've uncovered, as well as driving that revenue to the bottom line of your agency. And so you can craft that plan based on the riders and the program as we look through it. And keep in mind that guaranteed issue window offers a great opportunity to prospect your book of business in the senior marketplace. Okay, I'll reach back to Carol and see if Carol has any questions in our chat box for us, and we can take those right now.
No, Chris, I don't have any questions in the question box. Thank you.
All right, Carol, thank you so much. We are going to jump right into our critical illness program. Now, we're going to look at issue ages are 18 to 70 in California. As I mentioned, each product may have some state-specific one-offs or different time frames. That information, as I mentioned, will be available in the agent portal because when you're quoting a program, when you click on it, it's fail-safe. The state-appropriate information will be there as well as the application that applies to that particular program. Coverage for children up to the age of 26 with a $2,500 benefit amount. That's embedded in the program at no additional cost. And then you see the benefit ranges are $5,000 to $50,000 in $5,000 increments. Our rate structure is male, female, individual ages, nicotine, non-nicotine. So if you're looking at underwriting, if we stay below the 20,000, simplified issue off that. If we go above that, they're going to use an MIB and RX screening. But as you do your enrollment of the client, you'll be asking those questions at time of enrollment. And you would make and have a really good idea if that client would qualify for the higher amounts based on the responses that they give you at the time of the enrollment. Automatically embedded in this program is our return of premium. And so that would, there would be no additional cost for that particular benefit and a health screening benefit. This is our most popular benefit that we have on our CI plan, our critical illness program. Very high usage. It pays $50 per person for one of 30 plus wellness procedures. And those would be, you know, going, getting your annual physical, going to get, you know, blood work, that type of thing. So It's a great benefit. People use it. Very simple to submit your claim to LifeSecure, and the turnaround on payment is very, very quick. So it's a very popular benefit embedded with no additional costs in the critical illness program. Now, these are LifeSecure's critical illness covered conditions. You see the amount that it's covered at. So heart attack and stroke at 100, invasive cancer at 100, and stage renal failure and major organ failure. And then you see the others covered at 25%. So prostate cancer, coronary artery disease, carcinoma in situ. But if you look at the skin cancer box, it is covered at 5%. This is the one benefit that is a one and done. So if you use the skin cancer benefit, it is not renewable. It does not apply again on a future claim. And we're going to walk through how this program works. You have a really solid idea of how the critical illness benefit is calculated. So if you look at this example, this person, you will see that lump sum payment based on the amount you took at time of enrollment. So this person was diagnosed with invasive cancer, and they had a $10,000 benefit paid to them. 6 months later, they had a heart attack. So that would be a subsequent diagnosis of a different specified disease. So they're going to get an additional $10,000 because it happened after that 6-month window. Now, after being treatment-free for a year, invasive cancer returns. So there's a 12-month window there before this benefit would be paid again. And that's going to be paid at 50%. So that's a reoccurrence benefit. So there's a $5,000 benefit. So 1 year later, you're diagnosed with that skin cancer, and they're going to pay 5% of that $10,000, which is $500. So you're looking at a total cash benefit of $25,500 based on that initial benefit that you took at time of enrollment. So it's a great plan that keeps continuing to pay out based on the things that occur. Now, who's buying critical illness? We're looking at 46-year-old is the average age of our policyholder. We're looking at a pretty good blend between male and female. They're taking that $17,000, $435 benefit bank, and you can see that about half, a little over half are under 50, and about 48% are 50 plus. But the premium amount, just like the other two plans, hover in that $500 annual premium amount. So if you take all three plans, and your client needs all three plans, and you're bundling that together, you can see where the additional revenue adds up for your agency. Now, the thing we mentioned, all of our plans pay directly to the policyholder, and the policyholder decides what he or she wants to do with their cash. So uncovered medical deductibles. As we talked about earlier in the presentation, there may be many high deductible plans out there, and these policyholders see that they need to have some kind of coverage to cover that particular gap in that plan. If they don't have a disability program, for example, they could use that money to pay mortgage. Cost to retrofit their home or car. Maybe they had an event that will cost them additional money to put in things that will make moving around their home much easier. Maybe they're going to change careers or schedule, do something different in their lives. Some of the medications may be off formulary, so they may have additional costs association with medications. They can use that money for that. Stress reduction, maybe they're going to do something that is non-traditional type of treatment. And frankly, they can take a vacation or a trip if they feel that that's the best way to use the money. But really, the thing we want to talk about on this slide is that those benefits from all three plans are going to be paid directly to the person who's making the claim, and we will not tell them how they have to use that money, and we do not coordinate benefits with other coverages. Okay, here is a great slide within the agent portal if you are bundling plans. And keep in mind, if you have some questions on how to use that, we certainly can set up additional time to work through the agent portal and how to quote plans and how that works and how to jump from the quote into the application. But this is a screenshot, a screen grab of the combo quote and application. If you see up on the left-hand side, we started with the accident program. And if you look on that bullet right there, it says view details. So if you're in the middle of a presentation and a client asks you a question about how does a benefit bank work, or is this test covered, and you're not quite sure of that response, you literally can click on that and a PDF of the plan will come up and you can find the answer right there. And then below that, you have the annual benefit slider, and that goes, to the right based on how much premium that the person can afford. And then the choice of deductibles, so either 0 or 500. And then the same goes for the critical illness program. And so you can cover yourself, your partner, family coverage, etc. But they're going to ask some initial questions on height and weight, and then smoking question. And then you can slide that slider over based on the amount of coverage that the people need. And then if you look below that, you can see the return of premium. If someone asks you a question on how that works, you can click on that button and up will come a slide on how to discuss the return of premium, how to explain it and what it means. And then if you look at the plan for the hospital plan there, how it works, same type of thing. You can do the coverages, you can pick out the benefit amount that they are looking for, and this program gives you the calculated amount per month for each person that's covered. So if you look at those numbers, you're going to add those up, and that would be the premium amount due at time of enrollment. Not at time of enrollment, but their monthly premium. This is our agent portal. It is really user-friendly. So if you look across the top, you're going to see home, and you see those pull-downs there. That will give you all the information that we have with LifeSecure. So you can, for example, the forms and marketing materials is a great place to find all of the things Washington specific. So you can pull down that, click on Washington, and you can find the information for the particular plan that you're looking at, what riders are approved, what coverages are approved. Marketing material that may be Washington specific is based in that, that pull down. It's a great tool to be able to find the information that you're looking for based on the state that you're writing the business in. And the webinars, videos, and reference, we do weekly webinars with LifeSecure on all of our products. And if you would like to have a copy of one of the webinars that has been done in the past, you can click on that and certainly be able to get that information to you. Videos and reference material are in there. If you happen to work in the worksite space, we do have a pull down for worksite. We have a fantastic group of people that work on the worksite team, and your regional sales manager can certainly work with you if you work in that space. And then the quoting tools will allow you to quote a plan and jump right into enrollment from that space. The virtual office will have information on your book of business, commissions, submitted applications, etc. So it's a great tool to be able to track your business, and it is very, very user-friendly. So one of the things we like to talk about with LifeSecure is the ease of doing business with us. We talked about that combined quote and application tool. So you can quote and apply for all 3 products in one sitting. So it makes it very easy to work with your clients in regards to quoting LifeSecure's plans. The application can be signed remotely or via text or email, and we do not have application fees on our plans. Automatic premium payment via credit card or EFT on the preferred date of the policyholder, and we do not charge fees or additional fees to use a Visa or MasterCard, although we do see that premium payment by EFT seems to stay on the books longer. We can offer that paperless policy delivery via email, and we talked about our fast and easy turnaround. Accident, submit the plan generally within the next day. It is issued. On the critical illness or the hospital recovery program, it may be a couple of days longer, but generally if there are no issues on the application and things are checked no, those plans are issued within 2 to 3 days. So the turnaround is very, very quick for both you as the agent and for the policyholders who's interested in having that plan in place. So we have some programs going on. We want to boost your earnings with cash bonuses in addition to your commissions that you're going to be earning on your plans. So the first one here is Spring Sprint Unlimited Earnings Program. earn $50 per policy on your first 9 ancillary insurance sales, and then $100 per policy on your 10th sale and every sale moving forward. So there's going to be no cap on your bonus. That runs from April 1st, just started as a matter of fact, Monday, 2024 through June 30th of 2024. So this is a great opportunity to earn that additional revenue, and we do not cap this particular bonus. And then as a new agent coming on board with LifeSecure, you can earn up to $1,000 on LifeSecure ancillary insurance sales in your first 90 days. So great opportunities, really exciting bonus programs to drive some additional revenue for you as the agent. Then we do offer some worksite programs, start growing your worksite business based on earning potential. All products can be offered down to 3 lives. Keep in mind, accident is always guaranteed issue, so we don't have to worry about getting any health questions on that. Critical illness and hospital indemnity is few as 3 employees with employer contribution, and as few as 6 with no employer contribution. And we can offer a list bill in the worksite as well. So if you have questions on how these programs work, how the worksite program works, we certainly can answer those for you. And as I mentioned, we have a phenomenal team of people behind the scenes that help make those cases run very, very smooth for you as well as for the employer group as the end user. And there's just a quick poll question. If you're interested in learning more about Worksite, we certainly can make that happen. And we would work with Mike to see if there's an opportunity to do additional webinars on our Worksite program. But you can type that into the chat box if you're interested, or if not, don't. We're just trying to get some feedback on that particular marketplace. And then at this time, I'm going to reach out to Carol and see if we had some additional questions for our team here, Carol and I, and we would certainly love to answer anything that you have in as far as LifeSecure goes.
Hi, Chris. Great presentation. Thank you so much. At this time, I do not see any questions in the chat box. Maybe we can just open up the mic to all attendees and see if they would prefer to ask their questions that way. Thank you.
There you go. And Mike just opened up the mic for that. We did have one question that just popped in. I'll fire it out and let one of you tackle that. Once a policy, and I know the answer, but I'm going to let you cover it. Once a policy gets issued through a worksite program, can it be transferred to an individual plan if the employee terminates their employment?
Yes, it can. It is portable at the same cost.
There you go. I knew that, but I figured a different voice never hurts. So great opportunity there with the worksite, particularly on the accident piece. It's guaranteed issue. I can't think of an agent that I've ever talked to that doesn't know at least 3 or 4 customers who are small business owners, and this allows them to make sure in situations where their team has, you know, $2,500, $5,000, $10,000 deductible plans. We hear about that all the time. Great way to fill in some of the gaps on the things that aren't the expected pieces. And critical illness also does that as well. A little bit more nuance there with regard to the underwriting piece, but just simply asking that question to people, agents will be astonished at how much interest and how many people you're going to have leaning in simply by virtue of talking to them about something like this. So, all right, well, we do have everybody unmuted. We don't have any questions, so we refer to that as the webinar version of a no-hitter. Great job to both of you. Super appreciate you making your time available to help us out today and to help our agents out. We will be following up, as I noticed before, or mentioned before, we'll be following up with everybody on the call to get any additional questions answered and to also help take care of the contracting piece. LifeSecure's contracting, they have their own specific piece, real easy to work with. It's web generated, if you want to call it that, which enables everything to move through quickly. They'll have you up and running in no time. So quick reminder, next week on Wednesday, the 10th, Derek Lape and the team from Gillico will be on to talk about the Gillico annuity portfolio and some opportunities, the opportunities that you've got there. Given that we don't have other questions, I'm going to go ahead and wrap this one up, give everybody a few minutes of their time back. Chris, Carol, we appreciate you coming on board and making this presentation available for our folks. And we're hoping to have a great second quarter here. It's not very often that agents hear about a bonus program just a couple days after it came into existence. Usually what happens is they hear about it, on the 27th of June when it finishes up at the end of June. So you're right on the front side of it. Great opportunity there to bring in a lot of additional money by virtue of being in contact with folks and having these conversations. So thanks, everybody. Thanks, Carol. Thanks, Chris, for your time. We're going to go ahead and wrap this up. We will get it processed and get it uploaded to our website. So thanks, everybody. Take care. We'll talk soon.
Thanks so much.
Thank you.